This year has been a really interesting year. We're now at just around 30 million in total
Okay.
transaction volume. We'll likely be closing out the year at around 40.
All right, everyone, welcome to the Clinic Boss Show. Today we got a special guest, a good friend of mine, Soroush. He is a clinic owner and he is our M&A expert at Clinic Accelerator, and so he looks after a lot of the buying and selling activity within Clinic Accelerator. So, Soroush, welcome to the show.
Thanks, Rick. Happy to be back. Round two.
Yeah. So I'm going to ask you, Soroush, is this a good time to sell or buy a clinic?
I think it depends on who you're asking, right? But honestly, I think it's if you have the right structure and setup, I think it's a great time to put it on the market. Obviously, depending on how the economy might look, there's a lot of questions that still are unanswered, especially with what's going on with U.S., Canada. It is having an impact on obviously the markets. As a buyer, it's again this is kind of an interesting time as well. There's a lot of activity right now where people are looking to build another large platform. A lot of these financial buyers are trying to get into the game again, and think for the last year or two because they were been waiting for the economy. There's a lot of dry powder or a lot of cash waiting to be deployed, and so everyone's pretty eager to get in. So that's why I think it's kind of on the buyer side. If you're a financial buyer listening to this, it might be a good time for you, but also as a seller for sure, you'll be able to take advantage
Well,
of that too.
yeah, it's interesting you say that because, if you look at the last maybe 3 to 4 years post COVID,
Mhm.
everything got way more expensive,
Mhm.
right?
Yeah.
It got way more expensive to build clinics, construction costs, labor costs. And so starting up a clinic now is way, way more expensive than 4 or 5 years ago. And so for the I'm going to say more aggressive or the owners who are looking to scale right now, it is highly cost effective to buy a clinic right now because you're buying a clinic with a cash flow, right? And you lower your risk in terms of startup risk, right? Because you know how many years that takes to break even in a practice, right?
Yeah, 100%. And we're getting, that's why I think we're getting a lot of attention on a lot of the listings that are under 500,000, just because everybody pretty much knows now if you're looking at building 2,000, 2,500 square foot business in the healthcare space, you're probably going to spend over 300,000, over 400,000, depending on how nice you want the clinic.
Mm.
Yeah, nothing's getting cheaper right now, especially with tariffs. They're putting a lot of pressure on materials, on labor, on the shortages happening in different places still, unfortunately, from post COVID.
What would you say is a good construction cost? Right? Like, what's a good benchmark? $100 a square foot to build from start to finish, including equipment and supplies and all that stuff.
Yeah, again, I'll kind of give as generic as possible, but it really depends if you're building in Toronto, Vancouver, or Calgary or
Yeah.
Manitoba. It's going to be different, but I think on average you can probably look at something between 150 to 250 bucks a square foot. If you stay around 150 bucks a square foot, I think you're doing pretty good.
Yeah.
That's definitely on the
Now, is
cheaper.
that like a really beautiful clinic, or is that just bare bones?
It's going to be a fairly traditional standard clinic. If you're looking at putting a lot of premium stuff into it, you're going to be going north of 500,000,
Okay.
just based on obviously the labor and the talent you need to build something like that is a lot more expensive these days for sure. So you're looking
Yeah.
at
So
probably
for a 2,000 square foot clinic, it would cost you, what?
at least probably 4 to 500,000 if you're going to be building a nice clinic, right?
Hmm.
It also depends. I think a lot of people are moving towards this model of building big gym spaces. So that might actually help offset some of the cost. But then you get into the whole revenue per square foot debate and how you
Hmm.
maximize space. So there's kind of two sides to that coin, but it depends on the model you're also using to build out a clinic.
Yeah. Yeah. And so if you're gonna drop like $500,000 to build a clinic or say 300,000, $300,000 to $500,000,
That's right.
you may want to consider buying a practice that already does 300,000 to 500,000 in revenue, although it may be break even, right? On a cash flow standpoint, right?
Yeah, and that's exactly kind of how my career really panned out because there's a lot of opportunities out in the marketplace where you know for whatever reason, an owner wasn't able to get the clinic to a certain point where it was doing like 400,000 in profit. It was breaking even. And we're talking about like 60-70% of the market is in this bucket because it is hard running some of these clinics. But when you have the right tools and the right people leading that business, that's when it starts to grow. So when you have a really motivated buyer who wants to learn all these different principles to put into the business, they get a clinic that they would have spent 350,000 on anyways to build it out, but they get their staff, they get the caseload, they get all these different things with it, and now all they have to do is just clean up some of the structure within, add a couple people, and bam, you've made 3 to 4 times your money that you've invested into it right away.
Yeah, like I said, I think this is a journey that you went through. This is the same journey that me and Paul went through, and I think something more recent, I think we spoke about that a couple of months ago, was that the first clinic you bought, I think was doing maybe like $500,000, over a course of 2-3 years. Like you got it like to like be over $2 million, right?
That's right. Yeah, yeah. It's the principles are the same across the board. It's just a matter of having the time, energy. Energy is also important because a lot of people are just tired of it and they don't want to put in the time and energy, and
So a
that's
boomer like me shouldn't be buying a business then, Soroush, unless I'm surrounded with like Gen Zs and millennials like you.
I mean, listen, the age is not a factor. It's more just how defeated you feel after running a clinic. And so, if you're at that point where you're like, I don't want to do this anymore, and somebody can come and help you, there might be a scenario where you can partner with them too, right? And they'll come in and buy into the business at 70-80% and help you grow it.
Yeah. Who's buying clinics right now? Because you deal with a lot of buyers right now and sellers, right?
Yeah, so I mean, you have the three types in full force right now. Individual buyers, so people who are, clinicians that are wanting to get into the clinic owner space for the first time, or clinic owners that have one or two clinics right now that are looking to try to get maybe one or two more clinics. So those are, I would still categorize them individual buyers.
So are
And then,
these like physical therapists, chiropractors, massage
that's right.
therapists, like that bucket?
That's right. So you have the physios, you've got chiros, all these clinician owners. We also have non-clinician individual buyers, people who are quote unquote investor types that are looking to buy a business in healthcare. So those are also in the individual bucket that I would put. And then you have the financial buyers. So right now there's been a really interesting activity. There's a lot of groups trying to push to form another large platform in Canada, just because we know obviously the space is saturated with obviously few large players. So they know that there's room for another platform to be formed. And so there's a lot of these financial private equity type of buyers looking at the space and having a lot of good conversations. And then, of course, we have the strategics, right? The larger corporations that are looking to add clinics to their network. And obviously, that's another buyer too. So all three are actually in full force. It's really interesting to see how much activity there is right now. But really different in how they approach the whole process.
Interesting. And just so we get the nomenclature right, you mentioned platform. Like, what is a platform?
So so right now, if you think platform, you're looking at more than 5 to 10 locations minimum, right? Obviously, the true platforms right now have at least 100 to 200 clinics in their network, and so a lot of these financial buyers are looking to create a new platform with different philosophies. They might come in with a philosophy of I want to, focus on this type of clinician or clinic network, or some maybe they're physio only, or they want to do chiro only, or whatever their philosophy is. Um, so that's what they're trying to do. So they're starting off with buying maybe 5, 10, 15 clinics at one time, and then forming that initial group, and then continuously acquiring until they get to 100, 200 locations, or whatever their long-term plan is. And it's going to be different again based on.
Yeah. So a platform is pretty much like a network of clinics, whether it is a national network of clinics or maybe a regional, whether it's a
Sure. Yeah,
specific province or like our state, right? Or like a specific area, right? So
that's right. Yeah.
yeah. Okay. So we've helped a lot of owners sell clinics this year, and so Soroush, like, what type of how much money have we helped owners this year walk away with selling their practices here so far?
So this year has been a really interesting year. We're now at just around 30 million in total
Okay,
transaction volume, and
and
we're
transaction volume is like we've helped. we've helped create 30 million of like payouts to practice owners that sell, right?
That's right. Yeah, yeah, and obviously it's a large number of clinics and groups, but and we'll likely be closing out the year at around 40.
Okay.
That's what we're looking at right now. Yeah,
Cool. Yeah. And I think, if we add this year at 40 million, and I think, if I look back a couple of years ago with us exiting as well, like we are well north of like 100 million of transaction volume, right? So I think we come with a pretty deep, bench of experience with this entire ecosystem of buying and selling clinics with all the major players and all the different sellers and buyers, right?
that's right. Yeah, and what's interesting is because we are clinicians and been through the process and really understand the inside and out of the business. I feel like the transactions that are happening right now, the conversations are a lot easier, right? In my opinion, at least, right? I mean, that could be debatable, but there's a lot of really key points in the whole process where having that understanding of that business has helped make sure that we create obviously a really effective conversation so that it does get to a point of closing, because anything can happen on the 11th hour that kills a deal.
Yeah. Yeah. And we talked about this earlier. What would you say is the three types of clinics that people are selling right now, right?
Yeah, so yeah, if we were to categorize like the whole marketplace right now into three buckets, it would be clinics that are selling for, let's say, 2 to 400,000. So they're smaller one clinic situation. We've got the medium size, which is essentially between $1 to $2 million price tag for a clinic, and then we've got obviously much larger groups that are 6, 7 million plus for each group that is essentially going through that process.
Right, right. And so, and maybe you could go through, because I get a lot of questions in our community about this. Like maybe go through the process of this. What is the process of like selling your practice? What does that look like in your world when you talk to like a practice owner?
Yeah. So there's two marketplaces. There's the private marketplace and the quote unquote public marketplace. And so I'll kind of break it down into the two categories. So the on the public marketplace side, we'll obviously have a conversation. We'll talk a little bit about valuation or where a price point might land. We want to make sure there's obviously agreement there. If obviously the clinic you think is worth way more than it actually is, we need to have that frank conversation. Once we have agreement on where it might land, then obviously we'll go into a questionnaire. The questionnaire essentially is going to get a lot of details from the business and things around your marketing, operations, financials, etc. We'll take all that information, put it into a presentation deck. We call it confidential information memorandum, or CIM, and that's what we actually house for to be sent to buyers that might be interested. And then once obviously that's complete, then we have the listing go live. We market it as much as we can, like crazy, and we wait for the NDA's requests to come in. And then once those NDA requests come in, we start sending out the package to the buyers, and then we get into the conversations. And typically what we'll try to do is try to get multiple buyers at the table, so we have a little bit of a competitive bidding process. And in that process, then we'll choose the best letter of intent, which is essentially you're signing off, I want to work with this person now, go into due diligence. And in diligence, hopefully by then we're pretty firm on what the price looks like, and we won't find any big red flags in diligence. And if that's the case, then we'll go ahead and just do all your basic diligence stuff with making sure you don't have any taxes, no skeletons in the closet, everything looks good. And then you end up closing the deal, and then transition happens from there.
Yeah. And typically, how long is this process taking, Soroush?
So it depends on on the private marketplace. It can happen a lot quicker because the deal size is a little bit smaller. You might be able to do the entire process, I would say, within 3 months, right? And that's start to finish. So if we get all the information back from the seller pretty quickly, get the presentation done pretty quickly, put on the marketplace, diligence might take maybe 6 to 8 weeks on a faster scenario. And so that would essentially help us wrap up within 3 to 4 months, let's say. On the private marketplace, obviously the deal size is going to be much larger, and so there's a lot more back and forth that's going to happen. And there's a reason you actually want a little bit of a back and forth within the private marketplace, because in that scenario, you want everybody to really understand that business, and know what they're getting or what they might be missing out on if they don't put in a really strong offer, right? And so that is a huge difference between the public and private side. On the private side, the check sizes are like pretty large. And so you want the buyer to really, really understand that business
What type of
well.
check size are we talking, sir? If we're talking about 10 plus million, like check sizes, like what?
To 2 million per clinic type of scenario, right? So if you
Okay.
have multiple, you got 7 plus, 10 plus, like 10 plus million. So these are large amounts of money that's going to be moving around, and so buyers need to also be confident. So our job is to make sure that they really understand this business well, and they understand how it's going to help with their group or their platform, whatever they're doing with the business, right?
Yeah, and just to clarify, your role is to help facilitate as an advisor to put the best possible deal and find the best buyer with like multiple bids to get the highest offer. Right? Is that kind of your role, Sarush?
That's right. I mean, like the big role is the storytelling, right? I think as an advisor, you have to be able to craft a really good story so they understand the business well, right? You have weeks to help these people understand this business really well. Otherwise, they may not be interested, or they may have a certain thing that might be overlooked, whether it was a contract or a really interesting system they've got in the clinic, or obviously their profits are, very strong and their revenue is very diverse. Like there's a lot of different things that buyers are looking for, and with the process, especially on the private marketplace, we've really gone to understand what buyers are looking for. And so when we see those in the businesses that we're putting out, then we try to highlight that so they understand that, hey, if you're looking for a really young, strong leadership team, then we've got this young, strong leadership team in this business that's able to obviously help continue to work with you, continue to transition, and they might actually have opportunities for future growth within that network too. So you have to understand who it is and what you're highlighting. I think that's really the key to consider, right?
Hey. um, yeah, no, that sounds incredible. And so and maybe you could dive deep in. Maybe you could give a little more clarity on this. Like, what is the difference between a private and like a public marketplace? What does that mean for people who don't know what you're talking
Yeah.
about? Like Suresh, right?
So, I always I give the example in real estate because it's a little bit easier to understand. There's realtor listings that you'll see on MLS versus pocket listings. Pocket listings, if a realtor is listening to this, hopefully I don't get skewered, but pocket listings are these listings. Let's say a celebrity wants to sell their house. Um, they don't want to be known, and they don't want to be in the spotlight, or they don't want a listing, or there's news around it, right? So they just do it privately without even hitting the public marketplace. So they'll talk to different buyers, different individuals, and the transaction happens behind the scenes essentially. And so that's what the private marketplace is. Again, because the groups are larger, there's a lot more significant check sizes in this entire pool. We make everything really private and confidential in a way that we're going direct to the buyers that are within that pool, and we put this out, and obviously that's when we gauge interest and we get into conversations and eventually make a deal.
Yeah,
We
and the buyers in this case are the financial buyers, whether it's private equity or maybe some of these family offices or some of the strategics who have the big checks and the big wallet sizes, right?
100%. So that's exactly what I was going to highlight. Another big difference is the buyer pool inside this private marketplace is very different than the buyer pool in the public marketplace. So you might, for example, have hundreds of buyers, thousands of buyers in the public marketplace, but you'll have probably a handful, maybe less than 10 or 20 or 30 buyers that are going to be available in the private marketplace. And they get quote unquote qualified based on obviously their capacity to be able to give out those check sizes and their willingness to as well. Sometimes they might have a capacity, but they may not be willing. So then
Yeah.
obviously we make a decision. Are you going to be a part of this pool?
That's right, and this is why like these private deals you won't see it us promoted on like emails or social media because there's this level of confidentiality that these bigger groups want to maintain, right? Right. Plus, most people won't qualify for them, right?
Yeah, exactly. And to be a listing in that group, we also qualify the clinics, right? So you have to hit a certain number, you have to have certain profitability, because again, all of the buyers in that funnel are expecting a certain level of financial strength, certain level of operations, certain level of systems in place, etc. Like they're expecting something, and we need to make sure that we maintain that same quality as well.
Okay. All right. Let's talk about the buying process. So, what is the process of buying a clinic from a buyer's perspective, Soroush?
So again, let's talk for both public and private marketplace. So on the public marketplace side, we've got obviously all the listings on the website, or you can see them on social media, your social media, Rick, or on LinkedIn. And you'll, if you're interested, you click on the button, and it'll send you to an NDA link, and you'll sign an NDA. You wait for the seller to sign it. Once that's signed, then you get the information. And once you get the information, you're evaluating to see if this is the right fit for you. If so, if there's any other questions or material that's needed, we'll go back and forth. We'll help with that process. Obviously, we'll be involved with those conversations. And then once you're interested, you can submit again an offer through a letter of intent. And on the letter of intent, you'll include your purchase price. You'll include the terms that you're looking at, how much cash you're going to put down, what's included in the purchase. Again, a basic understanding of what things are going to look like, so that you can hopefully convince the seller to choose you as a buyer, and you can then go into due diligence and hopefully close the deal. And on the
Right.
private side is again a little bit different. You have to be essentially invited to that group. You get qualified. Obviously, once you're in though, anytime one of those private listings are going live, you'll get a direct email about the profit margin, the profitability of that business, and the location. And if you're interested, then the next step is for you to submit your interest for an NDA, and then we'll go through the NDA process and again submit the package to you with the financial. The package is a little bit more detailed on these ones because, again, they're larger deals, but we'll give access to our data room, which we'll share on email, and go through the same process. They'll evaluate, analyze, and get to a point of a letter of intent. Similar thing. Hopefully, you convince the seller to choose you, and then you go into your diligence process and close the deal.
Okay. You make it sound so easy and it's so fast.
It can be easy and fast. Again, as long as everybody is organized and everybody's on top of things. Things happen though. We've had in our buyer pool, people are replacing people, or things are moving, so then everything slows down because they don't have leadership in place, right? And then once that goes back, then speed goes back up. Or on the seller side, you're if you have everything organized well, your books are clean, you've got everything set up well, then the analysis of that is also pretty easy, right? So it can make the process pretty quick if everything's nice and organized. That part of the process of what we do is try to help organize a lot of this stuff and clean it up and make it really presentable so that it's easy to understand, easy to read.
Yeah. Hey, Suresh, can you maybe share an example of maybe a recent small clinic sale that closed recently, and what worked and what didn't?
Yeah. So the one of the ones we had closed recently, this was priced at about 120,000, so pretty small deal.
So it's like
um,
a solopreneur practice, right? Pretty much, right?
Pretty much, yeah. They were doing obviously not a ton of revenue, breaking even, but really great opportunity. Fairly large clinic, 2,300 square feet, and was everything was new in the building. The owner honestly just wanted to get out of running a clinic, and so just wanted the right partner. What worked really well in that scenario was, we had obviously a group of buyers, and we kind of already knew people interested in that area. So obviously we had put it out, and we also directly reached out to some of those individual buyers that were looking. And immediately within about a week, we got two letter of intents, and two LOIs. And so now immediately started a little bit of a bidding war between the two. The price went up by about 10-20% through the bidding war. And the seller chose this person, and they were working with their accountant and lawyer. What almost maybe negatively affected the deal was the lawyer. It was an asset sale, and which from a legal perspective it makes sense. Like they wanted to not provide any financials because you're just buying the asset. But however, obviously when we look at this whole thing, it's important for the whole picture to be present for these people buying the business. So it's not that the revenue is going to disappear. You're not just buying the furniture, although again, realistically, in an asset sale, that's technically what you're actually buying. But we kind of price things based on the revenue a little bit, based on obviously the potential, and so. But the seller was okay to share some of that information, which helped the buyer become even more confident through the diligence process. And the whole thing took about 8 weeks to close.
Okay.
So
Wow.
that was a very,
And what was the, you said it was 2,300 square foot and
yeah,
in the
yeah,
practice.
2,300
Okay.
square foot, doing about 250,000 of revenue.
And it
Um,
sold for 150.
120.
Could you
Yeah.
build a clinic at 2,300 square foot at for 120?
That not in that for sure, right? But again, like it's funny because the expectation of the individual was actually they were hoping to get like 80,000 or something, 90,000 out of
Yeah.
it. So obviously, we just priced it appropriately based on what the opportunity was, and there's obviously there is some level of risk with a practice that small, so you have to bake all that into how you price the business, right?
Yeah. Yeah. Wow. And then, you know, one thing I hear a lot is that, you know, some of these owners who had a smaller practice, but they spent a lot on renovations, right? And then when they look at, because the business doesn't have the cash flow, it's not making a lot of money, like it's actually also not worth that much, you know? How do you set expectations of what your business is worth given how much you spent on renovations or what you think the business is worth, right?
Yeah, that happens all the time, and we hate to be the bad guy to say you might not get your full investment back at this point. So we always give two options, right? If you're not at that point, obviously we'll recommend going down and actually developing the business a little bit more before putting it on the marketplace. But if somebody is like, no, I don't really want to go through that path, I just want to sell it now, we can price it, and we can obviously we'll have to come up with something reasonable, right? You can't price something in a way where it's so unreasonable that people are just gonna look at it and say, I don't this doesn't make any sense. You can't be so far off from what the market will actually pay. And so the seller has to make a decision, right? Do you want to continue to grow this, get to that number, which is totally possible. You just have to put in that time and energy for the next like 12 months at least. Or if you're hoping to get it just off your hands, then we can come up with other structures. Maybe we get creative. Maybe we ask for earnouts. Maybe we ask for, partial exits or something like that. But there's ways we can mitigate to try to get them to that as close as we can to that sale price. But what doesn't work is just overpricing something and hoping that it sells. Because people will do the math. They'll talk to their accountant. They'll talk to people. We've seen it happen that if something is priced too aggressively, there's a lot of back and forth, and sometimes buyers will walk away because of that.
Okay, cool. That was a good example. That was a good share. Yeah, there's always this, yeah, mismatch of expectations of what your clinic is worth versus what the buyers want to pay, you know? And at the end of the day, is like the market price is what dictates like, you know, the value of your business, not what's kind of like in your head, right? Or even what your accountant says, to be honest, right?
Totally. And this is why we have this conversation first. And it depends as well if we have a conversation, let's say I have a conversation with you, Rick, right now about selling your clinic, and I tell you it might be around this price. And then you're like, let me think about it. You come back in 6 months and then you say, okay, I'm ready to go through the process. The market could be totally different in 6 months. We've seen how things can quickly change the marketplace with things like tariffs, right? So you have to remember that this market is very fluid and things are moving up and down very quickly. So if you're thinking about wanting to go through the process and we talk about a number, best to go through it then and there rather than waiting like a long time and then hoping that that same thing sticks around. Because it might go up. It may go up too, right? Maybe the market gets heated a little bit more, or maybe the market cools. We
Or
don't
maybe your
know.
clinic does better too, right? You know,
Yeah,
because you've implemented like some of the strategies, like, you know, through
totally,
your podcasts or emails or social media, right?
totally, 100%.
Yeah.
Yeah. So a lot of things could change for sure.
But let's just say, like, if you're not one to do the work, your numbers likely won't change, right? So,
Well, yeah, exactly. That was the example I was giving. You haven't done anything, and the 6 months later, you're like, now I want to sell at this price. If the
yeah,
market's tanked for some reason, then obviously it's going to be a tougher time. Less buyers that are willing to pay. Banks are not going to fund it. There's a lot of
yeah,
factors at play. Right?
yeah. I think the best analogy is looking at a real estate, you know, right?
Yeah,
Looking at like a rental property, right? You know, are you going to renovate that basement? Are you going to renovate that kitchen? You know, are you going to renovate that bathroom, right? You know, but if you're not going to renovate it, then a year from now or 6 months from now or a couple years from now, like it may be worth like the same or less depending on the market, right?
totally. Yeah, 100%. The market factors and influence. Again, I'll underscore this one more time. Is a very very important thing to consider as you're moving through. your process, right? So that's why it's important to have everything lined up as best as possible to give the best chance for your business to
Yeah.
sell at a reasonable price, at a good price.
And the market is what the buyer is willing to pay for. Is that right?
That's right. That's right. Yeah.
Because if they're not to pay for it, that's not market price. Like I speak a lot of realtors. This is what they say all the time. So I'm just saying the exact same thing with on this show.
Yeah.
Let's share an example of a medium-sized clinic, Soroush, that closed recently. Tell me what worked and what didn't work.
Yeah. So a good example was one of the clinics we had recently worked with on their transaction. Um, so this clinic owner was actually super organized, and that was very helpful for the process. So we got through the entire uh, you know the prep process very quickly. And when we had listed it, obviously it was we listed it for over 1 million, and they had obviously very strong profits to back it up. And one of the things that was really critical here was the conversations with management. So one of the pieces of the process is after you list it, there's this management meeting that happens with buyers and the management team. And so that's where you can really put yourself on display. And that conversation went really, really well. They obviously talked about the future. They also, and this was truthful, this was authentic. They also mentioned that they're going to be sticking around. They want to help with transition. It wasn't one of those scenarios where they're like, I just want to get paid and then tomorrow I'm out, right? Because no buyer wants to really hear that, because they're putting a lot of money and or investment into this business. They want to feel like you're going to still support the process after the transaction close. And so the that was really helpful in the diligence process. Again, very organized. They had a lot of the documents that the buyer was looking for. Quickly submitted those. I think submitted over 80 documents within like the week, and that's what allowed the diligence to go through very quickly. And that one I think closed also within like 3 months. So that was a really interesting
And,
process.
and what was on the diligent list? What's
So
on the
their
due
diligence,
diligence typically? Yeah.
typically, yeah, typically they're looking at they want to vet to see if that revenue is there legitimately. So they'll ask for revenue reports, they'll ask for bank statements, they'll ask for payroll reports to just see how much the financials
And
are
to
moving.
cross-reference everything just to make sure that, like, hey, like, is there any, does it match, right? Is it aligned, right?
Yeah, because there are certain times where a bookkeeper accountant does something on the books, and then there's a mismatch with your revenue, and then obviously we have to explain why that is, and a lot of times it's some sort of adjustment or something that wasn't added to the EMR, and then you go into the tax diligence, so they'll make sure that you don't owe the CRA money, legal diligence, make sure there's no claims against you, no lawsuits in play, and then they'll go through all the obviously contracts for all the clinicians, make sure those are good and they're legit. And essentially, they're checking off all of these boxes to make sure that what we presented is the true reality of the business. And keep in mind, they've already done a site visit, so they've already usually before an LOI, people will do a site visit and come see the business in person to make sure that also it exists. But yeah, and then so once they go through the diligence, then they'll go into their purchase agreement, and they'll just go through the back
And
and forth.
how important is part of the due diligence is having maybe some of these operational metrics, like having a weekly scoreboard, like how much visits it does, how much, what is like the value of like a patient, like how many assessments and all that jazz, right?
Yeah, it makes a big difference just because you're giving a lot of visibility to this company that's buying the business, and more visibility and better organized visibility gives confidence to the buyers that what I'm seeing is what's actually happening. And of course, you can even back that up with your revenue reports and everything. So having those system structures, your org structure, your role documents, it shows that, hey, we said we have this great team in place, but then when diligence comes, you have no role document, no org structure, nothing really to show for it. They're going to question, hey, was this actually true? Right. And so you don't want to create fear for either side, buyer or seller, through the diligence process.
Yeah. So in this case, back to this scenario, Surush, like what did it end up selling for?
This was about 1.2.
1.2 million. And what was the revenue on it?
The revenue was about 1.6 million, I believe.
1.6. And do you remember the profit, the EBITDA on it?
Yeah, they were 1.3. Sorry, not 1.3.
1.3.
300.
Oh,
No,
that's
no.
amazing. Like, this sounds like a software business right now.
No, no. 300,000, 320,000.
Okay, cool, cool. And so was the owner pretty happy with the sell, the exit, and the sell price?
Yeah, I mean, they were so there was some scenarios obviously in the background where they wanted to sell. The owner was still young. I obviously don't want to share all the private details, but they were looking for something good price and to be done quickly because they needed to have the next phase of their life sorted out.
Yeah.
And so they were pretty happy with the process, and obviously they're very happy with the buyer, and the buyer as
And how much
well.
was it like? How much was the cash up front versus the earn out, or was it all cash up front?
This one again doesn't happen all the time. I want to just be very clear. Like sometimes this happens, but most of the times this doesn't happen. They had all the cash up front at
Okay,
close.
so they got the full 1.2 million up front. But typically, depending on the quality of your clinic, quality of the earnings, and whether you have a management place and you're like you got good trending operational metrics, and everything supporting it. If you don't have all those things, typically there is like some type of like earn out, right? Right?
Yeah, yeah. Typically, you can expect 20 or 30% to
Okay.
be held on the
Like
larger
held back,
deal.
yeah.
Yeah, on the larger deals, you'll see 20 or 30%, and then on the smaller deals, it depends, right? You might actually be able to get more of that cash down, or they might do something called vendor take back. I don't know if people have heard of that, which means essentially you're financing the purchase, so you are the bank
The
instead of
seller, right? The seller is lending that $500,000 paid over like 3 years or something, right?
That's right. It doesn't. It's not always the whole thing, but let's say a portion of that. They'll say, okay, 200,000. I'll let you give me in installments with interest on top, and then you
Yeah.
have obviously agreements to make sure that's secure.
What percentage is that happening right now in the deals? The vendor take back.
Um, it's
I
not
loved doing this back in the heydays, all right? Like we were doing vendor take backs like amazing, buy a business at 2 times, and then
yeah.
half of it was like VTBs, right?
Yeah, yeah. It doesn't happen as much. Obviously, we push so that they get more cash up front and as
Yeah.
little TV as possible. So we don't see it as often, but it is an option in a scenario where we need to get creative with a deal. Let's say
Okay.
we have a really good buyer, but they just maybe their funds are a little bit more limited, but the seller really wants to work with them. Then we'll include that as part of the deal.
Okay. And then this clinic, what's the square footage on the clinic?
This one was 2,500, I believe.
Okay, cool, cool. And same thing, like a medium-sized clinic. What is do you have a recent example of like a deal that collapsed and maybe like what went wrong with it?
Well, yes. So, and this is the only time that, and this is where we broke our process, right? This is really important. Where we had a scenario with a seller who there was a very aggressive broker that came into the business, into the fold. They wanted to cut us out completely, right? And to me, whenever that happens, I tell
What
the
do you mean?
seller,
There's a broker? Sorry.
an actual real estate broker.
Okay.
So they were representing a buyer. They came
Okay.
into the fold, and they wanted to pretty much hijack the whole process. Right? They came in with an offer that was better than the other offer we had. So this is where the discussion happened with the seller. And so again, they wanted to change the process to what they wanted to do. And we typically will say we're happy to work with anybody, but we have to be involved with the process because we are trying to back up the seller. But the seller insisted that let's just do the process the way they're doing it because they were getting an extra like 20 or 30,000. And again, we insisted on not doing that because we knew that it would lead to a bad outcome. Frankly, this broker on the other side was a bit of an asshole, and so you could immediately tell like
You mean a
because
real estate agent is like an asshole? What are you talking about?
no, I don't think they're all assholes.
Oh,
My dad's a realtor. It's all good. But this guy specifically was just like he was not being friendly at all. He was just completely. He was being very rude in the whole thing. Anyways, the key thing there was that we had recommended not to do this because anytime somebody comes and tries to hijack the process like this, I tell sellers all the time. I ask them a question: why do you think they're trying to do that? Because they're trying to take advantage of the process, right? We are here to back up the seller, and so as soon as somebody does that, to me, it's a red flag, right? And so we said, okay, fine. We wanted to obviously respect the seller's wishes, so we let them go through this process. And lo and behold, at the 11th hour, because of the other broker, the deal fell apart and nothing happened. And that was the only one where we actually didn't end up selling. So this person went back to the drawing board, tried to figure something else out. And the reason why that it broke down was so ridiculous because it was, see, again, this is where the experience of us actually being involved with landlords, it was a landlord issue where the
ah,
landlord is asking for a specific security from the buyers. But we've been through that process many times. We could have told them how to limit that, how to work with, obviously controlling that so that you're not liable forever. a lot of landlords will probably want to have some sort of security for new buyers, especially if they're
Personal guarantee.
unvetted
Yeah.
small
Yeah.
buyers, etc. And so it's because of that, and the buyers got cold feet and they left, and that was the best offer. The other offer we lost as well because we ended up pursuing this offer, and so that's when it broke down. And this is why now, if somebody says, "Hey, we're doing this," I said, I'm telling you right now that this is not a good idea. It's a red flag. We need to be involved. Just have a
Yeah.
car. I'm okay to allow
And
people
make
to have
it a
a
competitive process, right? Versus just
100%.
picking one winner, right?
Yes, they wanted to siphon it off. They wanted to just be themselves. They wanted to get the exclusive in there,
Yeah.
which again, all flags that this person might or might not become a good buyer at the end of the day. So our job is to protect the seller. And in this scenario, unfortunately, the seller had different wishes, and we respect again their wishes. But in the future, I don't think we'll obviously entertain that again, just because we know the outcome and we predicted it, and exactly what happened.
Yeah. Okay. Cool. Very good. All right, let's work. Let's do another share. Maybe you could share an example of like a larger sale. Something. Something around or near like 10 million or more that recently closed. Soroush.
Yeah, yeah.
What
So
worked?
there's a few. I mean, there's definitely a few examples because that I can think of, but I'll think of one of the examples that was really good, and the process was pretty short. So this was I believe, also 4.5 months, 5 month process, and we spent probably about 1 or 2 months to actually prep for this group. Again, remember, on the private side, we're spending a little bit more time because there's a lot more things to go through. It's a lot more complex than a smaller deal. So we put a lot of time and effort to prep the package, put everything in the right order, make sure we went through all the quote unquote ad backs and everything was clear, easy to understand. And we actually had a scenario within about 4 or 5 weeks. We got multiple offers at the table, and in that scenario, they had actually obviously we all three offers were very different in nature. Buyers, there was three really good buyers at the table, and they ended up choosing obviously one of the buyers that they had a good connection with, and they also were happy with the number, and so they ended up going through that process. And diligence again was pretty smooth. Obviously, a couple of hiccups here and there, which is very normal in diligence, but we went through that pretty quickly, and we obviously worked through what's normal, what's not normal, and again, they just submitted all their revenue documents and everything closed very quickly. So that was a really interesting deal because comparing that to another deal with at a similar size, the negotiations took probably 3 to 4 months for
Hmm.
the other deal.
Was
Um,
this owner very organized, like Soroush?
so this group was very organized,
Okay.
very had everything ready. Their numbers were clean. They also had very minimal ad backs. To be honest, it was a very clean business. I'll highlight the ad back scenario because there was a scenario where we had another group that went through, and they had probably of the entire profit, 60% was ad backs, which was a huge number,
Yeah.
and so that scared a lot of people. And so,
Why are we adding back all these fees? Like
right, and don't get me wrong, I know a lot
you
of
don't
people.
need managers working at your business?
No. It was like a lot of personal stuff. Like it was
Okay.
almost too much. Like it was to a point where, it was way too much, and so people get scared. They're like, "Oh, this is a lot of risk for me." Anyways,
Yeah.
but going back to
What
the
was
other
the revenue on this deal, Soroush?
on this deal,
Yeah, with these clinics, yeah.
this one was about 11 million.
Okay, 11 million. And what did it end up selling at?
This one, again, not to disclose the exact price, but it was over eight.
Okay,
Yeah.
cool. Let's leave it at that. Yeah,
Yeah.
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 So,
So, but that again, I want to underscore the ad back component because that's
okay,
a huge part of what we do in the private marketplace. Like everything's got to be reasonable, right? You can't just add back everything under the sun. Buyers will also lose confidence in our process and your clinic if we're way too aggressive with things, because some things are necessary to the business. You can't just add it back just because you feel like, okay, we don't need to do this anymore. Or another one that I want to highlight, this is a really important one, is a lot of people will tell me, well, we don't need to use our accountant anymore because they'll use their account, so we're going to add this back.
hmm.
My comment is, we can try, we can put it up, but the rebuttal is going to be, well, we need an expense for this clinic anyways. And so economies of scale that a larger buyer brings in, you're not going to get credit for that. right? Because that's the whole point of how they make a spread between how much they pay for the business versus how much they get. And this is called the effective multiple. So let's say they give you, 7, 8 times on your business, and they through the transition period they'll put in all these things to make the costs go down, to maybe they'll feed the business with more assessments or revenue, and by the end of that transition period maybe the profits grown like 30, 40% and the size has grown quite significantly, and when you compare that to then how much they actually paid for the business, that's their quote unquote effective multiple. So they're looking at, okay, now it went from 7x to 5x. So they made a 2x spread in the transition period. That's why some of these bigger buyers can pay a little bit more because they're looking at the effective multiple at the end of that transition as well, right? Seeing how much they can create more spread. Plus, obviously, there's also we call it the multiple arbitrage, which is the when you have multi locations, the multiple grows. They obviously have like lots of different clinics, so immediately if they buy yours as 7 or 8x and they sell the whole platform in the future to obviously a bigger buyer, maybe they sell that platform for 10 or 11. So now you've increased by 2x through the effective multiple by growing the business. You've also gained the multiple, so now essentially they'll get 2 times the price that they might have paid, and
Yeah.
that's just the nature of a big buyer.
Yeah. Or if they're strategic and they're worth like 18x, right? Right?
Yeah.
Then the spread
Well, yeah. Then the
is
spread.
even like more, right? So they're like, oh, it's a good deal buying your business at like 8 to 10 times, right?
Yeah, I mean, again, and that just to be clear, the 8 to 10 times is also much more rare because the business has to be set up really, really well. It's got to be a true platform. You got to have a lot of your ducks in a row. And again, the market will fluctuate. If you asked me in 2022, how much multiple at
Well, I think
1.5.
it depends. Also depends on how much like EBITDA you bring in, right, and the
But yeah,
geography spread. Like if you're talking about bringing in a couple of $1 million, like yeah, you're not going after like big multiples, right? But if you're bringing in like 10 million of EBITDA, like the game changes. 5 million of EBITDA, the game changes. So we wanna. I think this is about like setting expectations as well. Is that yes, those multiples exist, like double digits, but you're bringing in like significant amount of EBITDA with geography and with the geography, number of locations, and all that stuff is what needs to happen to get those multiples, right?
yeah, I think the vet industry unfortunately created this idea and expectation around the multiples that anybody and everybody can get 12 to 15 times on their single location doing 300,000 of
I
profit.
know, isn't that incredible? These vets, like your business doing like 300,000, you're getting like 12x, so
Yeah, but again, that's also cooled down because think about it like this. This is what I tell people. The reason why that happened is because there was a group trying to form a platform and bite market share, right? So what they'll do is they'll come in, they'll give you aggressive numbers, they'll bite as much of the market as they can, and then the rest of their acquisitions is nowhere near the 12 to 14 times. They're going to be at 3 times, maybe 4 times, right? And so that's how they average out their multiple through the entire network. So let's say 20% of their business was the 15 to 20x, but now they've got a platform, and now that platform is acquiring all these 3x businesses, 4x businesses, because now they have obviously reputation in the industry, and so overall they might have actually effectively purchased everything for like 7x if you do it in the larger grand scheme of things. Which is why I'm
yeah.
saying that these financial buyers coming into the healthcare space, obviously they're not going to be giving you 12 to 15x, but as an example, they might still give you more premium numbers because they need to form this platform. They
Depends
need
how
to,
early you're in, right?
yeah, that's what I'm
Yeah,
saying. Yeah, there's a lot of competition for that, and that's the wave that you need to catch in order to do well.
yeah, cool. Hey, Soroush, what is the top FAQs you're hearing right now from sellers?
Well, I mean, the top FAQ, we've kind of answered a few of them already, but who are the buyers, which we've already mentioned? How much is my business worth? And the question leading to that is, well, can I get an 8 to 10 times on my single location? And obviously, I have to give some bad news there. And also is how fast can I actually sell? Which, again, I'll repeat this one. It totally depends on how well prepared and how clean your books are. This is why before we even put everything into the marketplace, if your books are a huge mess, then we have to work through that. We got to get explainers going, or we got to work with your bookkeeper accountant and actually clean that up. Because then that process from release to closing will be probably 50% faster if we actually have things that are clean and easy to understand versus a huge mess, just giving them a bunch of numbers and hoping that they just figure it out, right? Those are usually the top three FAQs from
What were the top FAQs from a buyer's perspective?
from a buyer's perspective is, what's the value expectation of this business is my favorite question that every buyer loves to ask. And as we're always reasonable, so we tell people, we're within market. That's my usual answer until we actually get to a point of negotiation. The other big one now is, honestly, how do I get access to the private marketplace? That's been a big question because people know that there is this marketplace, and that's when I tell them they got to get on a call with me. We have to qualify them into the actual group, and then they'll be able to see and get access to some of the.
How do you qualify that group, Soroush?
So it's going to be a conversation. Obviously, we will go through obviously what their story is. We have to do a little bit of a check on, and we don't. Excuse me. We do like a basic interview to just get to know you as a buyer, because a lot of sellers want to know who is getting access to their business. And then obviously the additional layer is, if they're comfortable, is proof of funds would obviously make the process much more solidified, but that just depends on certain scenarios. If you have a big name already and we already know you, maybe less necessary. But if you're new to the market, you're brand new to the
So
space.
financial strength is really important because you'll be able to cut the deal sizes and be involved with the multiple bidding process, right? For the private transactions, right?
That's right. And a lot of people in the private marketplace, they also mention, well, how much EBITDA is there to bite off? And usually we tell them we've got about 13 to 15 million of EBITDA. Not everyone's gone through. Obviously, people are in preparation. So over the next few years, those are going to be going through the market.
Wow. So there's 13 to 15 million of like EBITDA in the pipeline of clinics that will likely sell in the next couple of years. Is that what you're saying?
Yeah, 2 to 3 years. Yeah,
Okay. That's on the private side, right, Soroush?
that's only private side. Yeah,
Okay. So all you whales who have big checks, like you DM me, okay? See if you pass the interview test, right, Soroush?
that's right. That's right.
Okay. Cool. I think that's good. Soroush, so how do people find out more about you, or if they're interested in either buying or selling a clinic, Soroush?
Well, I mean, there's a couple of ways. Obviously, DM to you, you'll pass them off to me, but directly you can email me with Soroush at clinicaccelerator.com. So Soroush at clinicaccelerator.com. And I do have my personal Instagram, but I don't use it for the business as much. So I definitely just email me, or DM Rick, and we'll get in touch to chat. There's also a link if you go into the listing page we have. If you submit an NDA, there's also, if you're the first time, you'll go through a call process and you'll be able to chat with us as well that way.
Okay. Amazing. Soroush, thanks for your time and coming on the show to highlight all the crazy M&A and the buying and selling activity that's going on right now in the marketplace, right? So
Thanks for having me. Hopefully everyone has a great transaction process, and happy to help when we can.